Welcome to Bull Market Thinking. I'm your host, Tekoa De Silva. With us here today is returning guest David Morgan, publisher of the Morgan Report, found at silver-investor.com. David, thanks for joining us again.
My pleasure, Tekoa. Thank you.
Yeah, it's been a while since we've chatted, and this is such an interesting time in the market. I've been saying that a lot over the past 6 months, but I'm sure you can agree. We chatted yesterday or the day before, in that you're one of the few people that are in the marketplace right now that have gone through a full cycle. That was one of the things that you said to me, that you've seen just about everything that you can see in the mining space. And so I'd like to ask, what's been going through your mind here during this spring and especially this past summer?
Oh, great question. Yeah, just to kind of reiterate what you said, I mean, I'm old enough now that I did go through the first bull market in my lifetime, which was basically, the early 70s through the peak in early 1980. And I participated in a great deal of that market and saw a great deal as far as how the silver market was being used and abused, and also what happened in the mining sector, and of course followed that whole situation, and meaning the commodity sector, but particularly the metals, onward through 20-year slump and everything else. So what did I see this last summer? I was seeing that we should be buying. I saw the sentiment being extremely low, a lot of people giving up. My subscriber base dropped about 40%, and I just kept, doing what we do best, which is hard work, not getting distracted too much by the naysayers and the gloom and doomers, meaning, we're kind of considered gloom and doomers in the precious metals side of things. But what I mean is the people that were gloomy and doomy within the sector that were saying, oh, the bull market's over, 48 is as high as silver will ever get, I wish I never heard the word silver, and on it goes. So I saw that, and I saw that as a huge buying opportunity. We were telling our members, the people that pay us, buy. We're coming out with some great recommendations all through that lull. Still continue to lose subscribers, but a lot of people that hang in there with us are extremely happy as of today, and I think we're just getting started on the next move up. I called the bottom in May, which was the bottom for the equities. I said I expect the bottom of the metals to be a couple months following that, and this August low situation that usually holds as a seasonality will not. I expect the market to start up in August, and Bill Murphy was also saying that, by the way. I'll give credit to Bill as well. And lo and behold, this was taking place. So, I made some good calls. It's always interesting to me that people don't buy when they should. I made a public decree many times that buying physical silver under $30 is a smart thing to do, and you probably had 6 months that you could have done it, and a lot of people didn't. Now that we're at 34.5, a lot of people are now interested in silver again.
David, I couldn't agree with you more. And I was thinking to myself that this whole investing game and these mining shares, it's a lot like going to the gym or doing some kind of self-defense or anything else, where you have, let's say, 3 or 4 different levels, and as you get tougher and tougher, people just seem to drop out, and you look around one day and you're the last one standing. Do you ever kind of get that feeling also?
Oh, somewhat. That's a good analogy. I mean, the kind of moves that silver makes, it's always made. I mean, silver can be very quiet as it was for 20 years and kind of run around the $5 level. But once it gets moving, it can be very volatile, both up and down. And since I have been through one market, as we said, I'm used to that. And I've been in the market for so long. So the kind of moves that might really shock somebody else, to me, I just kind of yawn. And you could make the analogy, I've been hardened, if you will, by the markets, particularly the metals markets, which are one of the most volatile of all. And so the things that gets people upset, I say, well, that's just silver behaving like silver. I really get manipulated or not. That's the way it behaves. So yeah, great analogy. And yes, I do feel that way. I feel not better than or anything like it, but it's experience. When you get to be my age and as devoted as I am to investing, particularly, the honest money situation and the mining shares, you can't help but have that experience, pay dividends. And they have. They paid dividends for me, then they pay dividends for our members.
Mm-hmm. David, now this window between May and August, to which you call the low in the metals and subsequently the shares and subsequently the metals, what were, if you were to say, share some anecdotal stories, what were some of the most obscene value issues that you saw out there in terms of explorers or producers on the mining side?
Well, first of all, looking at the miners as a group, like on the XAU, the XAU to bullion spread, in other words, the value of a group of mining shares versus what bullion sells for, which can be either overvalued or undervalued, was the most undervalued it's been in 30 years. 30 years. We're talking 3 decades. So when I saw that, I knew that we had to be pretty near a bottom. And I also knew that the sentiment was extremely low because the number of people that were not renewing their subscriptions with me and the number of people that just had it and wanted out. You know, they wanted out and they wanted out. A lot of them had a loss, but they just wanted out. So those two factors and, you know, some experience, whatever you want to call it, luck, I don't care. I called it and I got it right. But if you're serious and you want to make money, you want to get good information and you want to place your money in the situations that you have a very good chance of getting a good return. And people look back every time in the cycle, and we're talking, again, the last cycle and this cycle, same thing happened. And when the sector starts off, almost any idiot can run a mining company that has nothing to do with mining but a name and some property somewhere and run the stock price up. But those days are gone. Those people are long gone. They're promoting biotech or something else right now. They're stock promoters. They're not serious miners. The serious miners are what are left right now, and that's where you want to really separate the wheat from the chaff, as you always do in any investing endeavor. So that's where we're at. We got to look at the producers or the near producers. We got to check their assets, check their management, check their cash flow, check the treasury, look at the liquidity. We have to look at what the float is. We got to see, you know, if they've issued too many shares. There's a lot of things that go into it, but it takes time, it takes energy, it takes effort. But that's the kind of serious study that's required. Now, what I said about the early startups that made a lot of money and a lot of them really had no merit, that will happen one more time. And it will happen when the market's going absolutely manic, when the people that are now not even thinking about gold and silver, and I'm probably looking out 3 or 4 years, probably in the 2016 time frame or something like that. And these people become rabid gold bugs and silver bugs overnight, and they have to buy something gold and silver. Well, the promoters know that, and they will put out, again, moose pasture at a penny stock price, and they'll run these stocks that have absolutely no merit. And that will happen again. And that's where you see a ton of money flood into the market. Now, it happens in all markets. We saw it happen in the technology sector in 2000s, where you had, you know, IamAPet.com and GetYourCatToGo.net and all these crazy, you know, net-based businesses that had no business model, no cash, nothing, and they ran these stocks up. It was a very brief top of the technology boom. And you'll see a very similar thing in the mining shares this time, except I think, and this is what I think, but I don't know, that you're going to see it in a way that you've probably never witnessed before, because I think this time there's going to be such a mad rush for the gold and silver space that we haven't ever witnessed before, because it's a global market and the currency problems are so bad this time.
David, does that mean that theoretically a person could purchase a package of land, let's say 100,000 acres, and declare a drilling program? Let's say the land was just out in Arkansas, for example, next to some corn fields, and declare a drilling program and put together a presentation on silver indicating why it's the go-to metal, and take that public. When you say moose pasture, is that the kind of thing we're talking about?
That's exactly it, unfortunately. And most people, especially the late-to-the-party people, don't want to buy silver when it's over 75 and gold when it's over 2,500. And I'm projecting, you know, future prices, and I think those are conservative. So they'll look and they'll start doing a real quick study on the internet or from their friend or whatever, and they'll decide, geez, if silver was at 5, I'm not going to pay 75. But here's a cheap stock. People love cheap stocks. In fact, I'm going to digress even further to go and bear with me, it's for humor as well as anything else. But if you want to put one, you know, tried and true statement from me on my tombstone, it'll be people love cheap stocks. It's unfortunate because they don't understand why they're cheap. They're cheap because usually, not in every case, they're no good. That's why. But there'll be a ton of people that will happen because human nature doesn't really change that much, no matter what era you're living in. They'll see a cheap stock, it'll say, you know, silver speculator or silver whatever or gold, you know, gold moonshot or who knows what they'll come up with. And great promotion, probably some of the best websites of promotions you've ever seen. And the stock will only be, you know, 18 cents. And you'll see that stock go from 18 cents to $1.80 in 2 weeks. There's a way to play that, by the way. I'm coming up with a strategy called the sacrifice fly. But we know what a sacrifice fly is in baseball. At least people that know baseball, and I'm not a big baseball fan. But it's something that you throw out there for a long shot kind of thing. So you could throw some, money you could afford to lose and sprinkle around some of these promotions near the end of the cycle. But, we're far from that point now. But yes, that's exactly right, Dakota. It's more about having a land, and some of these guys will raise the money and not ever drill. They'll just say, as you said, plan to drill, and we are going to look for it. They'll make it legal. In other words, they'll keep on the edge of the envelope that legally they haven't done anything wrong because, they did have a lease option on the property. It was going to be $12 million, but it was for $1 to get the option, and they did have a contract with a drilling company that was for $250,000 drill program, but they only had to put up $10,000 to secure the drilling outfit 6 months in the future. So they'll have a whopping $10,001 invested in this thing, and they'll just pump the heck out of it. You'll see more than one like that.
In that same type of situation, those people could expense out the money that was raised in terms of salary and bonuses to themselves and fancy dinners and things, I would assume, too, correct?
Yeah, it's a little tougher to do this kind of thing in the Canadian market because after the Bre-X fiasco, they tightened up the regulation a great deal. The place, unfortunately, takes place most often now is still in the U.S. in the OTCBB, the over-the-counter bulletin board market, where these microcaps still can get away with, and not all of them. I don't want to bash them all because there are some legitimate guys that are out there working really hard and have their whole dreams and probably have their own life savings into some of these, companies. And I'm not just talking miners. I'm talking any kind of, small, company. But generally speaking, you got to be extremely careful in that market because a lot of it is there. The people that are there for one reason and one reason only, and that's to take your money from you.
Mm-hmm. So, David, in looking at the charts here, looking at silver, it's really exploded over the last 30 days or so. When you look out to the rest of this fall in 2013, what does your gut tell you in terms of how the charts could look at that time?
Well, I try to be consistent. I've been on a few shows recently. I'm looking for 35 to 40 for silver by the end of the year, so I really think it'll be closer to 40 than 35, and gold over 1850. In 2013, I really think that gold will be making a new nominal high. I mean, the old high of 1900 and change will be taken out, and I'm looking probably for 2500 by the end of the year, 2013. And silver will, in my view, take out the nominal high of 48 that we hit back in end of April 2011. And be beyond that, I'm looking for like 65 by the end of the year 2013. And I say all that assuming that things continue to hobble along like they are now. In other words, the euro hasn't blown apart. The U.S. dollar is still used as the reserve currency. And the reason I want to make that caveat is because things are unraveling and these anomalies do take place. These black swans do exist. And sometimes, you'll get a bank run or you'll get, some financial debacle in a brokerage house or whatever. We've already seen a few, as you know. It just hasn't spilled over into the metals markets, but it could.
Yeah. And David, as a final question for you here, I know that you have access to all different kinds of people and communities by publishing your letter. In terms of the fund managing community, the hedge fund managers, the guys that are dealing with lots of money during this period that we've had this summer, what are you seeing and hearing from those folks on the bullion side as well as the mining share side? Have these types of people been accumulating during this time?
A lot of them have, actually, and a lot of them are on the silver side. And on top of that, some have decided that they're not really that happy with the paper product anymore. In other words, most of them are, SLV, GLD fans because they manage a lot of money, and, it's harder when you deal in the physical realm to take bars and store them and all that. But nonetheless, some, I wouldn't say the majority, have said, you know what, it is worth the effort. I am getting out of the SLV. I am taking physical delivery. And, of course, the more that takes place, the better it is for the market as a whole because you really can't play games with physical ownership when it's not rehypothecated. The SLV probably has every bar that they claim on their website. What what you'll discover if you read the prospectus very carefully is that, one, they don't really discuss silver bullion. They discover the word silver, which is a tracking mechanism for the price of silver. And there's really several ways to rehypothecate whatever bars exist. So it could be lease, loan, swapped, and that could be done more than once. So you could have one bar has multiple claims against it in one way, shape, or form. So I'm not saying that it's a bad investment, but as far as being a pure silver investment or GLD mean a pure gold investment, if that's what you think it is, think again. It's not.
All right, well, David, in winding down, for our listeners that want to get involved with your newsletter, is this still an opportune time to take positions, and how can they get involved with what you're doing?
Well, I think it is. I really think, if you're really safety conscious, this is probably a good time, and the reason is that you're actually smarter safety-wise to buy after a bottom is formed and things start up. It's a good time. We've got a long ways to go, and I think if you're got out of the market or you want to get into the market now, it's safer than it's been, let's say, as far as knowing when a bottom is in, and also the amount of money that will be pouring into this sector over the next several years is going to be unbelievable in my view. I really think that there's not going to be many places to run as things unwind further. And the one place that's always stood the test of time are gold and silver. And again, to repeat myself, it's going to be people that don't want to buy the metals because they're so highly priced that will move into the shares and, again, into the cheap shares. As far as my report goes, you can go to themorganreport.com. That's all one word, themorganreport.com.
All right, well, David Morgan, publisher of the Morgan Report, thanks for sharing your comments again.
Cool, thank you very much.